guys, welcome back to a brand new video. I'm RexFinance, and today I'm going to be discussing why I believe CleanSpark stock is 392% undervalued, and also why I've chosen to place a large percentage of my personal portfolio in this stock alone. So, last week I had the opportunity to go down to the Bitcoin conference in Miami, where I met a lot of really cool people and really cool companies. In fact, I had the opportunity to sit down with Zachary Bradford and Matthew Schultz, which are management team members from CleanSpark, for an hour on their live stream, where I asked them questions about their company, their business model, and things like that. And I have to say, coming out of this Bitcoin conference and coming out of this interview I had with the management team, I'm even more bullish on what this company is doing and their business model. As a result of this, I feel that I need to make a new CleanSpark video, which is what I'm doing today, explaining my updated bull thesis for this company and explaining why I believe CleanSpark is doing virtually everything right compared to their competitors in the same industry. We're going to talk about CleanSpark's story in today's video, right alongside a spreadsheet that I've prepared to really prove why CleanSpark could potentially be 392% undervalued. I promise you that's not just some random number that I pulled out of thin air. But before I get too deep into the good stuff, I have a couple things to ask of you guys. First of all, if you're new here or returning and not yet subscribed, please hit the subscribe button down below. Also, please hit the like button for me so this video gets pushed out to a broader audience. And lastly, leave a comment down below if you're comfortable sharing how many shares of CleanSpark you personally own, and if you've been adding to your position as the share price has been depressed. All right, first let's talk about this tweet that I sent out yesterday. I've noticed that Twitter has actually started to push this tweet out to people that don't even follow me, but might be interested in cryptocurrency and or investing. I even had one of my personal friends that doesn't follow me on Twitter say that I popped up on their Twitter feed under cryptocurrency with this tweet. What that tells me is that there's a story here to be told, and whenever people hear this story, they absolutely love the story, which is why I've chosen today to make this video and go through a spreadsheet with you explaining CleanSpark's current valuation and why I believe they're undervalued. I chose to go deeper than just this tweet because tweets, unfortunately, are limited in what you can say. In this tweet, I said, let's break this Bitcoin play down. CleanSpark has $400 million in assets and essentially $0 in debt. They're growing profitability the fastest out of anybody in the Bitcoin mining space. They also expect to be at 20 exahash per second of mining power by the end of 2023, which makes them a top 5 publicly traded Bitcoin mining company. Also, the company only has 41.5 million shares outstanding, which is likely half of the next closest publicly traded Bitcoin mining company. In fact, most publicly traded Bitcoin mining companies have well over 100 million shares outstanding, and their share count is growing very, very fast. But if we scroll down, we can see that I mentioned how CleanSpark has not diluted since November of last year. The management team is fighting for shareholders, and they don't dilute unless it's for accretive reasons. I'll get into this later in the video, but a 100% HODL strategy that Marathon has, for example, comes at a cost, and it comes at a cost of shareholders. Somebody has to pay their bills. Anyways, I wrapped up this tweet by saying, in fact, insiders like Gary, who is the CFO, have been buying shares on the open market. No other Bitcoin miner can claim that. No other publicly traded Bitcoin mining company can claim that their insiders have gone out on the open market with any time within the last 12 months and bought shares. No other publicly traded Bitcoin mining company can claim that they have not diluted shareholders since November of last year. But anyways, let's go ahead and dive into this spreadsheet here that I prepared for this video and explain to you why I believe CleanSpark is anywhere between 315% undervalued and 470% undervalued. Just so everybody's aware, I have made this spreadsheet accessible to all of my members in the Discord server. In fact, we can see that somebody's looking at it right now. Anonymous Dingo, whoever you are, shout out to you. But if you want access to all my spreadsheets, my buy and sell alerts, or even giveaways, for example, Eric Long and Lethal Cow in the Discord server each won about $500 or the equivalent of 50 shares of CleanSpark stock via a giveaway that I did in the Discord server. And just for you guys that are watching this video, for the CleanSpark community, I've extended a special offer where you can join the membership for literally $1 every month. You're locked in for lifetime at $1 per month. Like I said, I've extended this limited time offer just for you guys, but it only lasts until after Easter. So if you want to join the membership, I would highly recommend you do it now. I'll leave a link to the Patreon in a pinned comment down below. But without further ado, let's waste no more time. Let's get into the spreadsheet now. You'll see on the spreadsheet some major differences between CleanSpark and its competitors that I've listed out here, which are Marathon and Riot Blockchain. Marathon, for example, already has 37,000 miners already deployed, where CleanSpark only has about 23,000 miners currently deployed and operational. Yet, Marathon has an additional 162,000 miners under contract that are yet to be delivered that will be up and operational over the coming months and or years. In contrast, CleanSpark only has about an additional 20,000 miners under contract that are yet to be delivered and up and operational. However, if we look at their future projected hash rate, Marathon wants to be mining at 23.3 exahash per second, whereas CleanSpark, almost identical, wants to be mining at 20 exahash per second. And it doesn't take a genius to see that something is off here. Marathon's going to need an additional 162,000 miners to reach 23.3 exahash, but CleanSpark only has 20,000 miners that are yet to be delivered that are under contract. So, obviously, CleanSpark is going to have to purchase additional miners going into the future. But this is also part of my bullish thesis on CleanSpark, which I will explain to you shortly. In fact, I've made a note on this spreadsheet that says the company will have to purchase an additional 167,000 miners to reach this projected capacity of 20 exahash per second. And those of you that are familiar with the Bitcoin mining space will know that Bitcoin mining rigs are not cheap. This is going to cost a lot of money. And if you recall my tweets, I mentioned how CleanSpark hasn't diluted or raised money via equity offerings since November of last year. So how is CleanSpark going to fund this? Well, let's go back to this tweet. The management team actually has came out and said that they will dilute for creative reasons, just not when there's such a huge valuation gap between CleanSpark and the rest of the Bitcoin mining companies, which is this 392% undervalued number that I have come up with. So do I think some mining rigs will be purchased with dilution? Of course I do. That's an accretive reason to do it, but so long as there is a valuation gap between CleanSpark and these other miners, it's simply not going to happen on large scale as the management team has publicized in the past. So, what is CleanSpark going to do to fund this purchase? Well, for one, CleanSpark actually sells some of the Bitcoin they mined. This is in huge contrast to Marathon in particular, who holds on to every single Bitcoin that they mine. The reason that does not make sense to me is that a 100% HODL strategy comes at the expense of somebody. And usually that is the shareholder. Somebody has to pay the salaries and the wages and the equipment and the mining rigs and the facilities. Somebody has to pay for all of that stuff. And if the company isn't willing to sell the product that they make to fund that, then all of that expense is going to come out of shareholders' pockets via dilution. And let me tell you something. I don't know a single company in history that has made a living on paying every single dollar of their expenses by diluting shareholders or selling more shares of the company. Eventually, that's just a toilet that spins lower and lower before it gets flushed. Every successful company in history makes something and then they sell that something so they can make more of that same something. That's how companies work. Successful companies don't sell additional equity to fund their operations. That's just not how it has ever worked. So why it would be different for the Bitcoin mining industry, I really don't know. Another lever that CleanSpark could pull to purchase their miners that they're going to need to reach 20 exahash per second is actually via their balance sheet, by leveraging their balance sheet. Of the Bitcoin mining companies, CleanSpark would be viewed as the safest borrower out of anybody in the space by anybody that's willing to lend out money. This is because CleanSpark has $418 million in total assets and only $24 million in total liabilities. In contrast, Marathon has just under $1.5 billion in total assets, but they have almost $800 million in total liabilities. Riot Blockchain is a lot safer than Marathon even, but still they're less safe than CleanSpark is. Their total liabilities account for about $200 million, and their total assets are above $1.5 billion. So, taking total liabilities and dividing it by total assets is a pretty lazy way but effective way at figuring out who might be a safer borrower than another individual or entity. For example, with Marathon, their liabilities account for over 50% of their total assets. Riot Blockchain, their total liabilities account for over 11% of their total assets, which is pretty healthy. But when we look at CleanSpark with 24 million in total liabilities, that is just over 5% of their total assets, which means that CleanSpark is by far the safest borrower here out of anybody in the space. I know I've only chosen 2 other competitors for this spreadsheet, but I'll tell you now that this holds true for the entire industry. If you don't want to rely on total liabilities divided by total assets, look at the EPS, the positive EPS, the profitability of these companies. Marathon last quarter delivered 10 cents positive EPS to shareholders, whereas CleanSpark delivered 35 cents positive EPS to shareholders. Delivering earnings and profitability to shareholders is what every single public company is supposed to do. They're supposed to deliver value to shareholders. And this is also an important note. Marathon, because they have a 100% HODL strategy for their Bitcoin, are forced to continue to dilute their shareholders, which obviously increases their outstanding share count, which just puts never-ending negative pressure on their positive EPS that they deliver to shareholders. CleanSpark, on the other hand, because they have the debt lever that they can pull, and because they don't dilute shareholders near as much as the other competitors in the space, don't have near the amount of negative pressure being put on their positive EPS. And because CleanSpark is delivering more earnings to shareholders per share, and because the company doesn't have any debt on their balance sheet, I feel that CleanSpark should actually be trading at a premium to these competitors in the space. Yet instead, they're 392% undervalued right now. Of Marathon's $765 million in total liabilities, the vast majority of that comes from debt, which again comes out of shareholders' pockets. It's a convertible note that is sitting on their balance sheet. And if they don't sell their Bitcoin, they either A, have to raise cash to pay off the note, or B, convert that note to shares, which dilutes shareholders anyways. So, that's just more and more dilution, again, that's going to be put on shareholders of Marathon. Now, I know that's besides the point. Let's get back to the fact that CleanSpark has to purchase an additional 167,000 miners. At first, when you see that, you might think that that is a big red flag. Maybe that's why CleanSpark is 392% undervalued compared to their competitors. But think about it this way. Marathon has had these miners under contract and waiting to be delivered for months, if not years at this point. Riot Blockchain is the same way. CleanSpark, having only 20,000 miners yet to be delivered, is not like that. I believe that everybody else in the space besides CleanSpark is actually focused on the wrong end of the arms race. Let me explain this to you. Marathon, Riot, Bitfarms, Hut8, etc. are all focused on buying miners, getting miners under contract before they actually find the energy and the power that they need to house those miners and to operate those miners. And as a result of that, they have miners that are sitting in storage for months, if not years, waiting to be deployed. And in that time frame, it's likely that a new, more efficient mining rig is going to come out to the markets. And as a result of that, their miners that are just sitting in storage waiting to be deployed lose value because something new, something greater has come out. Furthermore, we're seeing this today. These miners that have been purchased by these Bitcoin mining companies have come down in value tremendously simply because of inflation. Inflation is starting to come back down in the Bitcoin mining space. Bitcoin mining rigs are becoming more and more readily available, meaning that used miners are losing value because new miners are costing less. So having these miners sit in storage, sit in inventory, is literally losing money, losing capital for shareholders because either A, to review, a new, greater, more efficient miner has come out that just decreases the value naturally of older generation miners, or B, if these companies wanted to sell their miners back to the spot market because all they're doing is sitting in storage, they'd have to probably sell them at a discount to what they purchased them at because of the price of miners coming down naturally as inflation kind of cools off. I think personally that is horrible investment of shareholder capital, and this is why I believe CleanSpark is doing it the right way. securing their power needs before they secure the miners that they're going to need, so that they can deploy their miners just in time as their power comes online, so that they don't have miners sitting in storage or losing value for the various reasons I've laid out. But getting back to the valuation here, what I did was I took the book value of each of these companies, which means I took the total assets of these companies and subtracted the total liabilities. For example, Marathon's book value is $683 million, Riot Blockchain's is $1.3 billion, and CleanSpark's is $394 million. I then went to Google and found what these companies were trading at on the public markets, and found that the market value for Marathon is $2.3 billion, Riot Blockchain is $1.88 billion, and CleanSpark is $420 million. From there, I took the market value and divided it by the book value of each company and found that Marathon has a multiple of 3.37 times, Riot has a multiple of 1.39 times, and CleanSpark has a multiple of 1.07 times. The reason I believe that Riot Blockchain's multiple is so much lower than Marathon's is simply because their future projections and their future growth is much more limited versus CleanSpark or Marathon. It just makes sense that on the public markets, you would trade for more than your book value if there's more future growth ahead of you. CleanSpark, on the other hand, you can't argue that. CleanSpark almost has identical growth moving forward as Marathon, yet their multiple is 315% less than that of Marathon's, meaning that CleanSpark, using this valuation metric, is 315% undervalued. And again, remember that I believe CleanSpark should actually be trading at a premium compared to their competitors based on their current balance sheet and based on their current profitability and EPS. But instead, again, they're trading 315% undervalued. Furthermore, one other valuation metric that I came up with was taking the market value of these companies and dividing it by the company's future exahash per second. Basically, dividing the current market value by their future growth and their future capacity. For Marathon, the company is given an additional $99 million in market value for each individual exahash that they're projected to be mining at in the future. Riot Blockchain is actually more than that at $147 million in market value for each individual exahash per second. But CleanSpark is only $21 million of market value for each individual projected exahash per second of mining power. That is flat out ridiculous. Why would Marathon be given more market value per exahash of mining power than CleanSpark, when CleanSpark's balance sheet is in much better shape, and when CleanSpark is delivering more profitability to shareholders? It makes no sense at all. And this is where I get that CleanSpark, you could argue, is 470% undervalued. I get this by taking 98 million and dividing it by 21 million. And in this video, I've claimed that I believe CleanSpark is 392% undervalued. How I got that was taking the midpoint between these two different valuation techniques that I used in this spreadsheet. Now, it's important for me to note that no valuation technique is perfect. Every single valuation technique that you can come up with or that you can use has something wrong with it. So this could be off, but because of the company's current balance sheet, because of the company's future growth, and because of the company's business plan and how much better it is than the competitors, in my opinion, I actually believe that regardless, CleanSpark should be trading at a premium to all these other competitors in the space. Anyways, I'm going to end this video here. Don't forget to comment down below how many shares of CleanSpark you own and if you've been adding to your total share count. Also, please hit the like button down below. Subscribe if you're new here or returning not yet subscribed. And also take advantage of that limited time offer of getting into the membership for $1 per month. You'll get access to the spreadsheet that I've broken down in this video, along with a ton of other perks. I'll leave a link to it in a pinned comment down below. It's my Patreon. I would love to have you in the Discord server, so would the rest of the community. With that, have a great rest of your day. Have a blessed rest of your day, and peace out.